Well, Ini, I know Ini is waiting for us right now, and we're going to be talking about how we're assessing the CBN's effort to save the Naira. Ini, you must have been excited to see the tripartite committee set up by the president yesterday. What outcomes should we be expecting from there?
Yeah, well, thank you so much, Mark. I don't know if I was excited or if I'm excited, because we've had a lot of committees before now, even during the former administration, former President Buhari. We had a lot of economic teams and all of that, but the impacts that we hope to see is another question, and I guess a conversation for another day. Welcome to Business Morning on Sunrise Daily. Doing business in about 25-30 minutes now, starting from the global space. Oil prices fell on Monday, extending losses from the previous session after the dollar rose amid market concerns that higher than expected inflation could delay cuts to high U.S. interest rates that have been capping global fuel demand growth. Look at the numbers for this morning. We see that the price for Brent is down 0.4% at $81.27 a barrel. And then WTI from the United States, I must say, this is what Nigeria deals in. This is what Nigeria also has as crude. $76.14 a barrel, down 0.5%. Let's look at the factors that have drove this price to this level. A stronger dollar makes oil more expensive. We know that for late last week, the dollar reduced in its value compared to other currencies. The dip built on losses last week when Brent declined about 2% and WTI fell more than 3% on indications that U.S. interest rate cut could be delayed by maybe 2 months due to that uptick in inflation. The geopolitical risk premium from Yemeni Houthis attacks on the ships in the Red Sea is still there. It remained modest at only $2 a barrel, a boost to the Brent. That's according to Goldman Sachs. However, the bank has raised its summer peak price to $87 a barrel from $85 as Red Sea disruptions have driven larger than expected draws in stocks held by countries that are members of the Organization for Economic Cooperation and Development. And then from there, we go to the grain space now. See what's happening. Chicago corn gained ground on Monday with prices underpinned by short covering after the market dropped to its lowest level in more than 3 years last week, weighed down by ample world supplies and expectations of a bumper harvest in South America. Russia, cheap Russia grain is still contributing to this. Now let's look at the numbers. Wheat went up 0.5%. $5.71 for 3/4 of a bushel. Soybeans also added 0.3% to $11.45 a bushel. And now, of course, we already told you about wheat. Now, larger inventories of corn are mainly used to feed animals and as biofuel are providing headwinds to prices, which could have dropped almost 12% so far. U.S. farmers held a whopping 7.83 billion bushels of corn in storage bins on their farms as at the 1st of December. That's the most ever for that date, and up 16% from a 9-year low in December 2022. Globally, leftover inventories are projected to reach a 5-year high by September after accounting for all the corn used to feed livestock, make biofuels, and other purposes. So now we talk about green energy, and we know that one of that is biomass, biofuels, and you see grains also being affected because it increases demand, for these grains that are being used for those renewable energy. Now let's come home and see the price of commodities in Nigeria. Maybe this is what you have in your area. If not, you could communicate with us and tell us what the price is. Talking about grains now, rice. Some people say it's about 80 or more than 80,000, but from financial derivatives companies' findings, we find that recently 50 kg of rice, about 78,000 naira. I remember buying this rice for 15,000 naira not too long ago. At least I was an adult. Beans, 50 kg, 75,000 naira. Yam, the small size, about 1,200. The medium size, about 1,800. While the big one tuber of yam, 2,500 naira. How many families or how many times can a family feed on this? How much would you have to spend? Palm oil, 5 liters, about 5,700. Gari, which is the most staple food in Nigeria at this time, at 33,000 naira for 50 kg. We have alluded this to the issue of insecurity, especially in those rural areas. But we see the government making a lot of effort. We're waiting for those efforts to trickle down to this. We also see the Naira. Now, somebody was asking me, a bottle of groundnut that used to be about 500, 1,000 naira, now is at more than 2,000 naira. Is there a dollar element in that? Or is it Nigerians exploiting themselves? But we'll talk about that. First of all, let's do a little bit of real estate. Real estate and financing experts have identified urbanization and growing middle class in Nigeria as the indices that present opportunities for developers and untapped potential for domestic and foreign investors to inject capital into the real estate market. These form the crux of deliberations at the second edition of the annual WEMA Board 2024 Real Estate Outlook, which was in Lagos.
Real estate top executives.
For the second consecutive year, WEMA Board, a leading real estate and property development company, pulls together experts in the real estate sector to evaluate the impact of the microeconomy on the industry. For WEMA Board, the discourse is important considering economic disruptions and volatility.
The real estate market has struggled due to shortage of investment capital, limiting growth and development. Addressing the macroeconomic issues like interest rates, inflation, and the foreign exchange crisis is crucial.
In his keynote address, Biodun Adedipe, renowned investment and financial consultant, provides in-depth understanding of the fluctuating economic conditions impacting the real estate market and how investors and industry players could take advantage of available opportunities.
There are still some things we need to interrogate and change in our policy environment to make portfolio investments to come. And my recommendation is this, of course, the panelists will also deal with this issue, that we need to fix the exchange rate officially within a defined band. In terms of looking forward, you must interrogate your strategic plan, if you have one. Then relentlessly re-engineer your business processes and get involved with and strengthen sector advocacy.
We call it very delicate balancing act.
A panel of experts and guests, including the chairman of Odua Investment Company Limited, Bimbo Ashiru, who participated virtually, shared their views on issues presented and strategies to drive growth of the real estate.
As we embark on this journey together, let us remember the importance of collaboration and knowledge sharing by fostering an environment of innovation and cooperation. We can collectively navigate the challenges ahead and unlock the full potential of real estate market.
We also have to start thinking about projects. They may be huge, but we also have to start thinking about them is to take it in piecemeal.
We have about 22 million housing deficit like that, but when you look at it critically, they are from the bottom down. And unless you change your laws, you change your ways, you change your innovation, that will remain the same for a long time to come.
With so much said about the volatility and opportunities in the real estate sector, how is WEMA Board ready to champion the cause of shaping these opinions into solutions?
WEMA Board is ready to champion that cause, including relating with state governments, federal government agencies, and coming out of this meeting, that will be our next steps, and it will be very fast.
I'm sure through channels and some other media, government will also feel our pulse. We hear what we are saying, we hear our cry, that a disaster has to be declared in the housing sector.
Okay, here we go. I guess they got the whole...
One of the highlights of the event is the recognition and presentation of awards to some organizations who have made significant impact and contribution to the growth of the real estate industry.
It's a round of applause for Obosi Ele and Co.
All right, now to other pressing issues in the economy. The Center for Promotion of Private Enterprises, that's CPPE, has expressed its support of the decision of the Central Bank of Nigeria to approve the use of exchange rate reflected on the import documentation, that's the Form M, at the onset of import transaction. In a statement signed by the Chief Executive Officer, Dr. Mude Yusuf, CPPE calls it a laudable response to the grievances of investors in the economy that would reduce the current uncertainty around imports and related transactions. in the economy. Dr. Yusuf notes that, however, the CBN's intervention does not address the bigger and more troubling issue of current prohibitive cost of cargo clearance at the port, which had risen by over 40% in the last 2 months. He further appeals to the CBN to peg the customs duty exchange rate at 1,000 Naira for a dollar for the rest of the year, in line with the federal government's commitment to ease the current hardships on the citizens and the burden on businesses, as the current customs duty exchange rate of about 1,488 for a dollar is still too high in the context of the current galloping inflation and difficulties facing businesses and the citizens. It should be noted that stakeholders have reported of instances of abandoned cargo currently on the increase as consequences of escalating trade costs. Well, let's talk about this and a whole lot more with Professor Olawale Ajayi. He joins us. He's the head of Department of Strategy at the Lagos Business School. Joins us virtually now from Lagos Business School. Dr. Ajayi, Professor Ajayi, beg your pardon. Good morning, and thank you so much for your time.
Good morning. Thank you very much. Thank you for having me.
So we did see that circular on Friday, late on Friday, from the CBN. I think that's the latest we've had. We don't know what's going to happen this week. Talking about the customs duties, which we know has been changed about 6 times so far this year. We're just in the 2nd month of the year. And now where they say that they're just whatever rate is prevalent at the time of initiating a transaction, that is what will be used to carry through. Do you think this actually brings certainty to that space?
I think it's an attempt to ensure that players can, plan, that there can be some predictability. And I think that's a pragmatic response. So I certainly will not fault it. One thing about development, countries trying to navigate development, national development, economic development, is that they must be ready, policymakers must be ready to be agile, and they must be ready to be to experiment. So I would say that that was a good response. And certainly, you cannot. You would actually do havoc in terms of the marketplace, helping people to plan, and the prices will keep moving in a yo-yo manner. So probably this is an attempt to try to begin to herd the market towards some measure of stability.
Well, Prof, if you were to maybe grade the efforts so far, especially from the central bank's stance, a lot of adjustments have been made. Some people have said that actually brings a lot of uncertainty. Why don't we have a wholesome update of the policies at once? How would you grade the current efforts?
I think we have to separate the central bank before the appointment of Mr. Cardoso. You remember there was some sort of interregnum. And even at that time, well, we started with Mr. Emefiele. There was an interregnum. There were issues of probe and so on and so forth. So that certainly suggests that in that period, there was not the necessary level of stability to be able to think holistically about things. But since Mr. Cardoso took over, one would expect that while there will not be complete institutional stability, however, there would be a movement towards being able to look back and look forward. So I would say that they've done well enough. It would be a bit presumptive. And I know for the public, business persons who are being hit by the uncertainties, there is no excuse. But I think under the difficult circumstances, I would say that they're doing fairly well. What I would not like, and what everyone who loves Nigeria should advocate, is that nothing should be done, by panic measures. We should try to be a bit more evidence-based in what we do. But there needs to be clarity and probably communication around the strategy. And I think for me, we're waiting to see that communication about the strategy. We'll get past the volatility. But you remember that when Mr. Soludo was central bank, it was very clear there was some journey plan, FSS 2020, consolidation of the banks and so on and so forth. That was very clear. So we want a return to that measure of strategic thought at the central bank. My personal view, very humble view, is that since Mr. Soludo left, the other central bank governors had not sort of tried to follow through, had not tried to really look at the national competitiveness. And of course, we had a veering into unorthodox measures, which admittedly has left us very, very badly done by.
All right, Prof. I hear you asking for clarity and direction, for the plans and strategy. Thank you. And no doubt you are the head of the Department of Strategy, so I'm sure you really appreciate getting the strategy. But thank you so much, Prof. Olawale Ajayi, Head Department of Strategy at the Lagos Business School.
Thank you very much.
All right, now let's do a little bit of markets before we get back to Sunrise Daily. If we look at the numbers for last week for the market, the NGX, we see that it was a red market mostly and ended up in the red. For the summary, it was down 3.44%, and the market cap was still not back to the 56 trillion level at the close of trade for that week. If we see the stocks that made all of this happen, it's a red activity chart that we had right there. A total of about 42,000 deals at the close of trade on Friday. And there you have it. Banking was down, consumers was up, industrial goods really, really down right there. Market mover, positive or negative, industrial goods has been doing that for a while. Insurance, which seemed to be picking up for a bit, was actually down last week. We'll see what happens to it. Perhaps a lot of investors will try to cherry pick, seeing that the prices have dropped. Oil and gas, just a bit up. But the most important thing this week is that even as we speak, 10 a.m., it's past 10 o'clock. So the MPC of the Central Bank of Nigeria is meeting as we speak. Remember, late last week, we had the lawmakers affirm those members that were going to be part of it. So they should be meeting now. They were supposed to start by 10 a.m. Tomorrow, they start by 8 a.m. Tomorrow is decision day. Today, they start conversations on those variables that should be considered to see where Nigeria goes. Well, I don't think anybody has said there's going to be a reduction in the rate. Everybody has said there's going to be how high, the increase in rate to be. But let's see what to expect from the markets, maybe from the MPC, as we have joining us in the studio, Patrick Ejemudia. He's the research analyst with Sterling Asset Management. Hi, Patrick. Good morning.
Hi, good morning, Nini.
So we're here talking, and the MPC of the CBN are there. So what do you think they're discussing at this time?
Of course, nothing
inflation at 29.9%.
Exactly. And trying to see what they can put together to bring the level of inflation down.
Yeah, well, I mean, sometimes I just wonder. We know that the current CBN governor has said that there's inflation targeting. That's what we're working with. Yeah. But sometimes I just think, isn't that putting the CBN in a tight corner? Because a lot of the factors driving inflation in Nigeria is beyond the monetary policy makers. Yeah. It's in the fiscal. We talk of insecurity, supply chain disruptions, and all of that. So is the CBN...
Yeah, these are two issues. There's one on the fiscal aspect on the one hand, and there's the monetary aspect on the other hand. Now, if you look at from the monetary aspect, you see that money supply has also grown. If you check the growth of money supply from December to January, you will see that value has gone up. And it now becomes paramount for the CBN as a tool to see what they can do to control the amount of money in circulation.
But that reminds me of an interview that we had with the Minister of Finance last week, and he said the reason why we have excess money in supply is because in the past 8 years, there was money being pumped into the economy without corresponding productivity. But I mean, this latest money in supply is just within this year. So it's not about 8 years ago. So that means there's still something that is being done wrong.
Yeah. So two ways. We've mentioned one. The major problem is what we've talked about earlier, the problem of food insecurity. But again, now that the CBN has come, if you plot the trend of money supply, you will see that, yes, in the past 8 years, money supply has been growing as well. But the value that it has grown has shown this upward trend, particularly from June, when we had the unification of the exchange rate. And the essence is because government needs to now pump money to take care of this exchange rate depreciation that we are having. So that value has gone up. And if that value has gone up, the CBN, the Monetary Authority, will have no other option than to say, okay, how do we control the amount of money that is in circulation?
So we see them very busy at the fixed income market, auctions every week. And, you know, I think the yields are looking good. So it's attracting a lot of investors. Is that working so far, or it's too early to say?
Yeah, it's too early for now because we'll begin to see the results, particularly if you look at the market now, the equity market, you see that people are moving because they are coming to take advantage in the fixed income space. And what that happens is that these monies will be more part of system. And if they mop it out of the system, then what we'll begin to see, maybe sometimes in March, maybe not too soon, maybe in the very long run, we'll begin to see these things yield some positive results.
When you say March, I just laugh. I laugh, Patrick, because even United States that thought they would start rate cuts, they're still postponing till about 2 months. So I wonder when we have inflation at 29, we have food inflation at over 30. You know, I wonder when we'll ever talk about cutting rates.
No, for now, we might not be talking about cutting rate because the rate is very high at the moment. 29.9 is very high. So before we'll be talking about cutting rate is to bring it down. In the United States, they are talking about bringing that to about 2%. And they are currently above that, just about, I don't know, but they are currently above that. But in Nigeria, we are very high. So we cannot be talking about cutting rate now. But we hope that if we get it right now, the rate will start coming down, then in the next future we'll then be talking about.
So do you think in the past we have had conversation about, we see the MPC increasing rate, we don't see a corresponding impact in the economy. Do you think that it will be different now?
Yeah, the one major reason why it's always like that, because you see the MPC increasing the rate, and at the same time the fiscal authorities are increasing the expenditure. So it doesn't go together. So for it to work, the two authorities must pursue the same goal. And that's the reason why you see those things don't go together. Monetary policy is increasing the rate, inflation is also going up, and you'll be wondering why. The reason is probably sometimes attributed to the fact that the fiscal authorities are, at that time that the monetary policy is increasing the rate, they are increasing expenditure.
So maybe because then we didn't have a coordinating minister of the economy. Now we have one, and in that our conversation with him, with Channel TV, he did promise that there'll be closer collaboration between, you know, the fiscal and the monetary. So do you think, or do you see conscious efforts by the fiscal side to cut expenditure so that they will reduce the money going into the economy?
For now, Nigeria can't be talking about cutting expenditure now because if you know...
So it's a contradiction, so where do we go from there?
So the issue is basically that you keep hearing about the food insecurity problem and government is trying to see what they can do to boost the agricultural sector and all that. But at the same time, there's still some level of control. You cannot just leave it and say because you want to keep pumping money into circulation, both authorities should be pumping money and all that. What you will see at that level will be high level of inflation that we may not be able to control or be talking about at that time.
Well, the good thing is we've heard about ways and means. How much does that contribute? Now we've seen this administration saying they're going to cut down or maybe reduce or stop ways and means. I'm not sure which stance they want to take now. But how much does ways and means contribute to the challenge that we have now?
Of course, these are a form of money supply into the system. And so because by the time the CBN gives this to the government, it pumps into the economy. And that's, of course, increase money supply and causes inflation. And of course, that can also be the reason why we're having some of this exchange rate crisis that we're having, because with more money, people have more money to demand for FX. So it has a role to play. So if the CBN, or the Monetary Authority, is saying they want to control it, then it's a good one. But the major issue is that drive to be able to keep to it, to make it stable, and so that it doesn't now come out of hand after a few weeks or a few months.
Not when there's a need, then we see them going back there.
Exactly.
But how does all of this affect the markets? the equities market. We've seen the NGX slow down in the last 2 weeks. We want to assume that the investors are going to the fixed income market because the yields are looking attractive. But how do you see all of this, the decision of the MPC and all of that affecting investor sentiment?
Yeah, that tells you the level of risk appetite of Nigerians. Most people want a situation where they put their money in a place where they can get stable income, even though the return in the equity market is high, but the risk is also very high. So because the rate at the fixed income is coming up now, you see a lot of people moving from that market, and that's why you see the market likely to go down, because those factors that drove the market up to the level that it is now, they're actually not there again. Before now, we see the strategic position of investors. They are trying to take position of, because of the Q4 report and the full year report of company that was coming out, people are taking position, and all those other things, they are now out. So what's driving the market now going down is because of the rates in the fixed income space that is going up. So people are moving towards that market. And like I said, because of the low risk appetite of Nigerians.
Yeah, but the earnings, I don't think the earnings for NGX, I don't think it really made a lot of movement. Or did I miss it? The earnings and the statements that came out, financial statements.
Yeah, it didn't make so much movement, but again, because the factors that drove the market initially, sometimes we know that it has some factors to play. Those earnings have some factors to play. But if you take a very careful look at it, you will see that two main factors are what drove the market. In January, you will see that the rate in the fixed income was low, and people move money from the fixed income market to the equity market. But in February, this rates are coming up. So people are taking money from that to this place now because of, like I said, the risk appetite. Again, you also see that the major factor that, again, has made this market to go up, like I've always said, is because the exchange rate has also depreciated. And when this exchange rate depreciates, like I've said, you will see firms that have foreign assets, you see their values going up. And when their values going up, the demand for their shares go up. And when the demand for their shares go up, their share price will go up. And that's why you see a lot of companies now, their share price, the banking sector, you see their share price coming up. And so that is one activity that has been driving the market up. And these activities are no more there anymore. And that's why the market is coming down.
All right. Do you want to say how many basis points you think the MPC will raise rates tomorrow?
Yeah, well, I've heard a lot of issues there and there about people saying 300, 500. But I think between 50 basic and 150 basis points.
Oh, you're not even up to 200.
No,
I've had 200 the most.
Not up to 200, because, we have to look at what exactly do we want to pursue. Government at the moment now is also trying to grow like you pointed out in your review, you will see that the industrial market, the industrial goods sector is down. Yeah. And why? Because the rate is already up for most of them to borrow. And when they are not borrowing, they are not investing, people are not buying their stock as well, so they will not be doing well in the market. And I'm sure that government wants to increase that sector to do well too. So they will not want to increase the rate beyond 50 basis points or 150 basis points.
All right, we just have to wait about 24 hours and we'll know if that's correct or not. Thank you so much, Patrick Ejemedia, research analyst, Sterling Asset Management.
Good to see you.
Yeah, good to see you too. All right, so that's it on this side of Sunrise Daily. Back to the conversation, the current affairs side of Sunrise Daily with Maokpe, Ayo, and Kayla. Kayla, I really have to get used to having you on the team, so don't forget me. Don't forgive me, but back to you guys for the rest of the program.